If you could take somebody's money in, pay them 0.1% for it, and then lend it out and earn 4%, that means you're earning positive 3.9%, right? And so that is the power. Banks don't make tons of money in as far as huge rates of return, right? But what they do is they earn small returns on everything that comes through. If you want to be able to create financial independence, the first thing you need to do to create predictability with getting that financial independence is by creating a solid, stable foundation of money that you can't lose. It's got to be bulletproof. It's got to be fortified. It's got to be the financial fortress of your financial life, so to speak. Hey, what's going on, cash flow hackers? It is Chris with Life 180. And for this video, I want to talk to you about how to build your wealth by starting your own personal bank. Now, a lot of people probably hear that statement and they're like, holy crap, I can't buy a bank. I can't start a bank. I'm not a banker. But let's take a step back and really think about the function that a bank plays in your life. It's a place for you to store money. It's a place for you to access leverage to money at some point in time. And when we think about what banks are actually doing, and I'm not going to go super deep into all the fractional reserve banking system and all that stuff, but at its simplest, like kind of core level, banks, what they do is they are leveraging your money. So what happens is you give money, you put money on deposit into a bank, and at the same time, the bank then in turn pays you an interest rate. And when they pay you that interest rate, let's say they're giving you 0.1% for a savings account, which is pretty common these days, right? In this low tax rate environment, or low interest rate environment, I should say. And so when they're paying you that 0.1% interest, what do? They have your cash on deposit, and that is called a tier 1 asset for the bank. And so what are they able to do? Because of the fractional reserve banking system, they're able to then leverage your money out and lend against the assets that they have on deposit, right? So I'm not going to get into details about all that, but that's simplistically speaking, that's how it works. So when they lend against the money that you put on deposit, they can lend up to 100 times what you put in. So you put $1,000 on deposit with a bank, they can lend $100,000 against that. You put $10,000 in, they can lend out $1 million, right? So think about it. If you could take somebody's money in, pay them 0.1% for it, and then lend it out and earn 4%, that means you're earning positive 3.9%, right? And so that is the power. Banks don't make tons of money in as far as huge rates of return, right? But what they do is they earn small returns on everything that comes through, right? And that is a big thing to understand. So if you could put yourself in the position of controlling the banking function in your life and implement a system that kind of created a set of rules for you to operate like a banker would operate and make decisions about what you invest in, how you save your money, how you spend your money, and ultimately what percentage of your money flowed through this system because you know the wealth it could create on the back end of it, I think you'd be very interested. So when we talk about this, what we're really talking about is a properly structured whole life insurance policy. A lot of people, you can go around online and you can find different kind of, marketing names for this. It started with Nelson Nash when he created the book Infinite Banking, and then other people have kind of followed suit and created different marketing. Like Don Blanton, amazing guy, I love Don. He was a mentor of mine. Has the Circle of Wealth and Money Tracks. Same concept. There's other systems like Leap that some insurance agents use. Become your own banker, bank on yourself. Like all these things are all the same. Like they're all like the same concept and principles. Nelson Nash is kind of the godfather of the industry. God rest his soul. He passed away a couple years ago. But the bottom line is it works, and people try to, leverage that concept and make it their own. My buddy Caleb Williams wrote an amazing book called The And Asset. Fantastic book. Caleb does an amazing job. He takes a lot of the infinite banking stuff. He's simplified it. He's talked about taking it to the next level, and he's basically taken infinite banking and simplified it. We do cash flow hacking. The concept of cash flow hacking is simply saying, how do you invest for cash flow rather than investing for accumulation for some time out in the future that you don't know what the result's going to be. You don't know what the environment's going to be. You don't know what's going to be going on in the world. And so if that's the case, and you got to invest for cash flow, the question is, what is the process? Now, I'm a big believer that we need to be keeping our money safe. If you want to be able to create financial independence, the first thing you need to do to create predictability with getting that financial independence is by creating a solid, stable foundation of money that you can't lose. It's got to be bulletproof. It's got to be fortified. It's got to be the financial fortress of your financial life, so to speak. So by doing that, by building that foundation of your life, by using this financial fortress that you cannot lose money, what it does is it allows you to create that spread, that arbitrage, right? The idea that we need to be chasing these big returns long term is just a myth that the financial industry wants you to believe. I mean, think about it. The idea, within the past 15 years, the whole concept of all these stockbrokers going to fee-based management is not a coincidence. And guess what? It's not for your benefit. It's for them. It's for them to annuitize their business. When they sell you on the idea that, oh, this is better for both of us because you make money, I make more money. You make less, I make less, right? Or if you lose money, I make less. But if you make more, they make more. If you lose, they make less. You get what I'm saying? They still are making money when you're losing, right? Like if they were not earning on a down year, I might be able to get behind it. But all it's doing is it's annuitizing your money. And money managers are always talking about assets under management because they can basically figure out how to annuitize their business. And the cost of that 1% management fee over a 40-year period, it's really laughable to me because people are like, oh, whole life insurance commissions are crazy. Well, compare them to what you're paying for a money manager over time, and you're going to see what I'm talking about. Just run the math, do a spreadsheet, or check out some stuff online. It is astonishing how much money people are paying these money managers over the life cycle of their retirement plan, and they don't even realize it. And they're freaking out about, a $5,000 commission for a whole life policy, and they're paying literally hundreds of thousands of dollars in some cases, 10x at least what they'd be paying for a whole life commission, right? So anyway, that's probably another video, but you get what I'm saying. It's kind of crazy. So kind of getting back on topic here, the bottom line is when you start your own personal bank through a whole life policy, you want to make sure you do it in a very specific way. There's a lot of people, kind of charlatans out there, so to speak, and I don't mean to begrudge them because they're just doing what they're trained to do. A lot of companies that don't really implement infinite banking, that don't really allow or encourage these banking type policies to be done. A lot of agents that are not trained properly on how to do it. But here's what happens in the insurance space. All these agents have heard of the idea around the infinite banking concept. And so what happens is you go, hey, can you do infinite banking? I need a whole life policy that can be designed like an infinite banking policy. And that, the agent will be like, oh, I know how to do that. And the reality is I literally talk to people every single week that tell me they have what they call infinite banking policies, and then they send them to me, and I have the team look them over, and guess what? They're nothing like it. It is completely bad. I like to bang on Dave Ramsey for being wrong about life insurance, by being wrong about whole life insurance, but the reality is, in a lot of situations, Dave Ramsey's right, because when you do it, when you have whole life insurance, like most life insurance agents will design a whole life policy, it's not pretty. It's just not. And Dave Ramsey is right. The problem is if you do it the right way, you can really create a lot of leverage. So let me wrap it up with this. If you go out and you get a whole life policy and you design it properly, you can have a lot of liquidity starting literally within the first 30 days of the policy. That can be a phenomenal leveraging tool, both for your business, for real estate investments, for any other kind of investment. We call it the and asset, going back to my buddy Caleb's book. The and asset, that the whole idea of the and asset is, and one of the things I do cash flow hacking. We call it cash flow hacking because we do a lot of turnkey real estate and stuff like that. And we teach people how to reach financial freedom in 10 years or less by utilizing turnkey real estate and leveraging whole life to amplify the speed of the growth of that by creating extra arbitrage, right? And so arbitrage is the spread of what you're paying to borrow the money and what you're earning on the interest. If you can build in a positive arbitrage, that's leverage. That's what banks do. That's the concept of infinite banking, right? So by you starting your own bank, you can get this going. I do it with cash flow hacking. In that turn, that turnkey real estate, in that instance, the turnkey real estate is the and asset, right? And so that's just something to understand. Your banking policy, your whole life insurance, is never an investment. It is a storage vehicle that you leverage to invest outside of the policy. You have liquidity, use, and control of that money to invest where you see fit, when you see fit, in something that you know and understand and can actually at least have more of a control of the outcome of than you would in a mutual fund, right? That's the big deal. That's why I love this so much. And the bottom line is, when you do this and you create leverage and you start, you have complete control of this, and you can build in that arbitrage in the policy. And then you can, once you have, say, $65,000 or so or more, you have the ability to leverage it even more and get a cash value line of credit. It's one of the big reasons I love doing a front-loaded dump into the policies, because if you can afford, say, a $20,000 a year premium and do a $50,000 dump in, or maybe a $60,000 dump in, the front-loaded policy year one, that means you can literally have liquidity of more than $65,000 almost instantaneously. And then with that liquidity, you can turn around, flip it, leverage it, get a cash value line of credit, pay 1.5%-ish right now at the time I'm filming this video. It may be higher when you see it, but at the time I'm filming this, pay about 1.5% for a cash value line of credit, be earning 5.25 on the cash value, build in a guaranteed arbitrage, positive of almost 4%, right? Like that's amazing. That's what banks do. And so that's why whole life insurance is the only thing that you can do this with. You cannot do this with index universal life. You cannot do it with variable universal life or any other product. So you have to think about that. And if you have any questions at all, go ahead and leave them in the comment section below. Happy to engage, happy to answer any questions that you have. And if you want to go deeper, if you have any more questions, go ahead and use the link below. Set up a conversation with somebody on the team. They'd be happy to talk to you, happy to answer any of your questions in a no pressure, non-sales-ish way. And if they do get too salesy with you, you let me know and I'll get after them for you. But I promise you, this is something, if you're thinking about this, you need to learn about it. You need to get after it, because this should be, I believe, the core foundation of every single person's life. Every single family, every single individual needs a tier 1 financial asset in their life, just like the banks do. Banks utilize whole life insurance as a tier 1 asset. It is as good as cash in the vault for them. So think about the importance of that. If they're doing this, why put your money with the bank when they're now turning it around and paying and putting it in a whole life insurance? So think about that, and we'll go from there. So until next video, I hope you have a blessed, inspirational day, and I'll see you then.